you're kind of rushed into finding something. So that's where 1031s can be a detriment, is because you're rushed into finding another property of greater or equal value, and you want to make sure you find a good deal. Hello, everyone. Alex Deacon. Today's topic I'm going to discuss briefly, because I'm not an expert on this. Trust me, it's 1031 exchanges. I'm going to give you a little bit of information that will be helpful, but then you're going to want to seek out expert advice on if it makes sense to do a 1031 exchange. Now, a 1031 exchange is basically the government will allow this. You're taking the sale of, let's say you own a 4-unit, and that 4 units worth $400,000. And when you sell it, your gain, which is the IRS looks at that and says, okay, you're going to pay tax on this because that's your gain. Let's say your gain is $100,000. And let's say your capital gains tax on that is 25%. I'm just going to pick that as a round number. That means you'd have to pay the IRS at the end of that taxing year $25,000. That's 25% of the 100,000. The IRS will allow you to take that gain, that full 100,000, and apply it to a property of equal or greater value. So you have to designate, locate, find a property, get it under contract of greater or equal value. Then you can defer that capital gain. So you'll save $25,000 in taxes that year. Now you're just deferring it because you're going to pay it eventually when you sell that asset. And it just allows you to put $25,000 to work for you out of the 100,000. That's called a 1031 exchange. The downside of that is if your gain isn't enough, I don't even know if 100,000 is enough to do it. You have to talk to your accountant and someone who does 1031 exchanges for a living, because there are companies that specialize in those. They might do accounting, but they also specialize in 1031s. Seek out their advice and say, is it worth it? Because the parameters, you only have so much time to, as far as what I understand, to locate a property and then close on it. It's not like you have 5 years to find something. You might have 6 months or maybe a year. I'm not sure. I don't think it's a year. It might even be just 6 months. You're kind of rushed into finding something. So that's where 1031s can be a detriment, is because you're rushed into finding another property of greater or equal value, and you want to make sure you find a good deal. If this was helpful to you, send me an email. If you want anyone who, I do have a couple contacts at 1031 exchanges who do them on a regular basis, who I've reached out to for advice, and just email me, alex@alexdeacon.com. I'm happy to share those contacts with you. Please subscribe to the YouTube channel, and you have a great day. Thank you.